For joining for this session and sorry for the delay. Uh, Mr. Ranjith from BSc, he is having some connectivity issue, but he will connect in a few minutes. For that, I will take you through why SGB investment is important for all and what is the key features of this product and why it is beneficial to you. This is the main agenda for this presentation which we are giving. So sovereign gold bond, now everybody is aware about this product, that this is a product ultimately replacing the physical gold itself. Any client or any investor who is 2015, the first tranche which was out, it has been already redeemed and customer has got almost double. Okay, and that amount which he has got, the profit which he has gained, it is almost double, more than double he has received, and the investment which he has got, the profit which he has gained, it is tax free. Okay, so I will give you the basic key features about this product and what are the glimpse about this product. This will give you the insight of this product. Okay, so sovereign gold bond. In current scenario, RBI does not deal with individual directly. So we are acting as a mediator for you, either bank or any broker. Okay, so RBI is the main issuer of this product and it is direct. We have two platforms which we are providing. It is through mobile app and the ITS which client is investing through. In this gold bond which customer is investing, gold bond in which customer is investing, it is a digital form of investment which you are doing. Okay, SGB is a product which is equivalent to the physical good which you take with additional features on it. SGB in the financial year, government issued different types of tranches which is there. This is the fourth and the last for this financial year tranche which is there. The fourth series for financial 23-24. Issuer of this product is RBI directly. RBI issue this product and it is in the dematerialized form which you receive. Secondly, in this only HUF, individual, trust and university, they are entitled for this product to invest in this. Secondly, in this minimum 1 gram you can invest and maximum there is 4,000 grams limit for financial year. Suppose if you have already invested 4,000 grams, which is 4 kg in the last tranche, then you are not entitled for the current series which is ongoing. In case the investment which you are doing, okay, the 4 kg, it is at one click. You have to just visit under your mobile app under IPO section. The SGB will be available. You just have to go and place the units which you want to buy, and amount will be captured automatically, and then you have to proceed. So your order will be placed. Okay. This product is 8 years lock-in product. 8 years we have to keep this product as a lock-in product. Customer investing in this product have multiple queries about this, that 8 years lock-in. But gold is not a short-term product. Gold is a long-term product which you are getting a return in the long-term basis. It is not a short-term product where you can do buy and sell. Okay, immediate basis you will not get a return that much. But it is an 8 years horizon which is lock-in product. But client who is investing through digital form or physical form, they have option of exit. In digital form, if you are buying, you can exit from the market from the day once it is listed. Okay, but subjected to liquidity. When liquidity is there in the market, you can exit in this product. The 5th year option which government is giving you is purely linked with the gold, which means right now you are purchasing this sovereign gold bond, and after 5 years, if you are willing to redeem, okay, then government is giving you an option to redeem. 5th year, the rate which will be quoted will be linked with the gold rate at that time. The 5 years, after 5 years, the rate will be available, that rate will be. But in the secondary market, if you're doing any buy and sell, in the secondary market, buy and sell transactions are purely based on the liquidity and the demand and supply, which is there. Okay. Liquidity is not as much as you are, like if you have 4,000 grams, so at a stretch you won't be able to liquidate that. Okay, in the small portion you can exit, because liquidity is not that as we see in the equity market. Okay, digitally you are going to pay in this amount. So if any customer who is doing online, because our platform is purely online basis, online if customer is doing an investment, he gets 50 rupees discount. So as per the market rate, you are already getting an additional 50 rupees discount, which is a benefit for you. Secondly, rate of interest which you get it, 2.5 per annum rate of interest which you get, it is on the face value, which means right now the rate is going on 6213, which you will add 50 rupees, so it is 6263. So on that rate, for the next 8 years, we will get the 2.5 per annum rate of interest, which is payout at the half yearly basis, which is 1.25 you will get every half yearly. The rate of interest, the interest which you get, it is taxable. It is taxable as per your income tax slab. The interest which you get it, I will just repeat, the interest which you get it on the SGB, it is taxed as per your income tax slab. Secondly, the gold bond, SGB. Government give you a provision that you can keep this as a loan, collateral for a loan. Okay, you can get a loan against this SGB. HDFC Bank provides you the provision where you can have a collateral facility against this. So this is also a benefit. If suppose you are in need of money, so you can keep this as a collateral with them. The main thing that any given point of time, because see, this product is for diversification. It is not that the whole full amount you're going to invest in this. Any customer who is diversifying this portfolio, they should have as a gold as a product in their portfolio. Why? Because at the time of inflation, when the market is not performing, gold is going to give you the highest return. And at that time, if you are in need of money, you can liquidate this. The second thing is the tax treatment, the tax facility which you get it on this. This is the main star point that you have to consider, that if any customer or any client or any investor who is investing in this product right now for next 8 years, if he keeps in lock-in, if he is not going to redeem that, after 8 years it is going to get auto redeem. At the time of auto redemption, the full amount will be credited to your account. The rate will be linked to the gold rate at that time after 8 years. Okay. After 8 years, the rate which is reflecting, if suppose today is 6,000 rupees and suppose in the next 8 years it reaches to 20,000. I'm just giving you a hypothetical situation. If it is 20,000, the capital gain which arises, it is tax free. So any customer who is investing in primary market, while you are investing in primary market, you don't have to pay any kind of tax, any kind of commission, any kind of making charge, nothing. Okay, as you pay in the physical gold. But in this, if you keep for 8 years, it is locked in for 8 years. After 8 years, it is going to get redeemed. You are getting capital gain benefit while investing in this product. If suppose you are in need of money and you are redeeming in the secondary market, if you sell it off, it will be taxed as per short term and long term. The short term will be less than 3 years and the long term will be more than 3 years. If it is less than 3 years, then it will be taxed as per your income tax slab. Okay. And if it is more than 3 years, then it is 20% inclusive indexation. You get the indexation benefit also in this. If suppose this product is transferable, either you hold in physical or demat, you will be able to transfer this any given point of time. Any person, if you want to transfer, you can transfer. In the secondary market, you are doing transfer, or offline also if you're going to transfer that. Okay. So if you are transferring this, the capital gain exemption benefit you lose out in that scenario. Okay. you will not get the capital gain benefit. The concerned person in whose name this is transferred, he will not get the capital gain this exemption benefit. Only for those investor who is doing primary investment and he is holding till 8 years, he will get the capital gain benefit. Okay. This is listed in the secondary market. All SGB which has been come, they are listed in the secondary market. Only thing is that liquidity is less, but you can trade in that. The main thing about this product, because gold as a product, every individual has in their portfolio, either in the form of ETFs, either they have in the physical form, or SGB also, where customer is investing. This is the best option where you can invest in. Why? Ultimately, gold rate, if you will see, if you will track in 2015 onwards, because I'm tracking to it in 2015, that's why, because this first tranche had been issued in the month of November 2015. It has given you, at that time the rate was 2,680 rupees, and now the rate is 6,200, if you will round it off. So it is more than the double the customer has already gained. So it is long term, but in my this career and my span of this investment which I'm doing, I have always seen gold price shooting up. Okay, I have never seen the downward trend. It is slow moving, but always has a upward trend. So it has attractive interest with asset appreciation, because your amount is going to get appreciated. It is going to redeem at the time of redemption. It will link with the gold price. You don't have any risk of storage, and the main thing is that to beat inflation, you should have gold as a product in your portfolio. You get capital gain exemption if you held till maturity. You don't have to visit any store or anything. It is hassle free. At one click you can do it digitally, and this is the purest gold which you are investing in, which is 999.99 rated. It is directly issued by RBI. And tax benefit which you get, the capital gain tax benefit you get on this. It is tradable in the secondary market. I have already explained you that it is tradable in the secondary market. Subjected to liquidity, it is tradable, but it is listed. All SGBs are listed and it is tradable. Transferability, you can transfer this. If you have in the demat to demat, transfer is also possible. If you have in the physical, you can convert that into physical to demat and demat to physical and transfer. Okay, so all the facilities are available. You can transfer. You can get a loan against this. Bank, HDFC Bank gives the provision for that. So to round it off, if you will see this chart, the return which you are getting, you don't have to pay any making charges on it. You don't have any question mark of purity. Okay. You don't have to pay any GST. You can exit in the market. Only thing is that liquidity is less, but you can exit. This is for the diversifying of the portfolio to beat the inflation. So ultimately, this is the win-win situation for any customer who is buying in the digital form and not buying in the physical gold. So if any customer is willing to, if suppose it is related to a customer is having a daughter, and after 8 years or 9 years down the line, she's going to marry. Okay, so just giving a situation, right now he can just buy this SGB, and at the time of redemption after 8 years, that rate will be linked with the gold. He can get that amount. Okay, on that basis, he can make this gold ornament which he wants to make with a new design and everything. Okay, if you're right now going to buy any gold and you're going to pay for it, the making charge you're going to pay, the GST you're going to pay, and the time of you're going to redesign that gold ornament, you have to pay. You have to lose out something on that part. But in this, there is no such kind of situation going to arise in sovereign gold bond. This is just a scenario which I have given. Okay, as an investment perspective, only you can invest in this product in the long-term basis. Okay, not the short term. So this is about the sovereign gold bond, why we need to invest. So rounded off, there are 5 pointers which you have to I will highlight it. Okay. Number one is you are getting your investment in the secure form of investment which you're doing, because you are buying this in the RBI as directly with the RBI. RBI, and your gold product, you are ultimately buying a gold only, which is backed by gold. So ultimately, this is a secured form of investment which you are doing. Secondly, to beat inflation, you should have a gold product. Tax treatment, you get capital gain exemption if you held till 8 years. Thirdly, whenever any customer is investing in physical, he is not going to get any interest. But in this, you are getting 2.5 per annum interest. Thirdly, no cost of storage. You don't have to keep any kind of locker or anything. It is held in the demat form. So there are multiple of situation where you can compare this product and where it is where you are getting benefit out of this. Okay. So this is all about this product that as an investor should invest and should know about this product, that why to invest. As a gold product which you are buying in the physical form, that is not going to give you a good return as compared to this product. So as the product details which I have already explained you, this is all about the gold which you can invest, which more 3 days are remaining to invest. Okay. Wednesday, Thursday, Friday, the window is open. You can invest in this product. And to round it off, any doubt or any query or any question if you have, you can just put it in the chat box. I will take it one by one. There's one query which is raised. If someone purchased today and later he becomes NRI, then he or she will be sold before redemption. See, in this case, NRI are not eligible in the primary market. Okay, in the primary market they cannot invest, but in the secondary market through NRO account they can do the buy and sell in the secondary market, which means NRIs are eligible only through secondary market. So suppose you have bought it right now, you will be able to redeem in the secondary market if you have the NRO account. You should have an NRO account in that case. Thirdly, again, NRI related queries there. Is NRI eligible for this product? See, in the primary market, as I said, NRI are not eligible in the primary issue. But in the secondary market, once it gets listed, he will be eligible, but not in the primary market. One more query, which we will take it up. It is no capital gain on redemption. How if I purchase in the secondary market after listing? Then at time of redemption, it will be capital gain. Yes. So answering this question, in the primary market, if you purchase and you hold till 8 years, then you get the capital gain exemption. In secondary market, if any customer buy and sell, he is eligible for short term and long term because you are not fulfilling that 8 years criteria. You are getting this SGB transferred from somebody else. Okay. So this is a transfer which occurs. So you will not be getting this capital gain exemption benefit on this. Only for the primary holder it is eligible. You will be taxed as per short term and long term. Short term will be less than 3 years and long term will be more than 3 years. Short term means 3 years will be as per your income tax slab. Long term will be 20% inclusive indexation, which is you are getting indexation benefit, but capital gain exemption you will not get if you are buying in the secondary market. Okay. In the secondary market, there is one query which has been asked. It is cheaper in secondary market. Why? So to answer this question, in the secondary market, it is not linked with the gold price. It is purely based on demand and supply, the liquidity which is there. So it will be cheaper, but you are losing out the capital gain exemption. The difference between the primary and secondary is the one that you will lose out the capital gain benefit. The cheaper is why? Because it is purely depending on the demand supply. Liquidity is less, the rate is less on that basis, on that side. Earlier invested in physical form, how do I check the balance? In the physical form, if you have, you might have bought it through some bank. Okay, just giving an claim bank, because in HDFC Securities we have purely digital form since inception. This product is live. If suppose you have bought it in a physical form, any kind of broker or bank, you might be having that certificate. You can approach the you can mark a mail to RBI directly that I have in the physical form. Physical form has itself the units details reflecting on its page. So physical form which you have a certificate issued by the RBI directly. On that, all your units detail along with the price and the maturity date, it is mentioned. So you don't have to check anywhere else. It is the certificate proof of investment for you. And customer who has in the digital form, demat holding statement is proof of investment for them. Okay. Ah, someone wants to know the procedure how to invest in SGB. So you are trading with us. So you have a mobile app application, Invest Right. If you log into that Invest Right application, on the left hand side under investment section, you will be able to see the IPO section. Under IPO, the SGB will be available. You just have to click on the SGB. You have to mention the units. Amount will be captured automatically, and then you have to proceed. Only you have to mention the unit, but it is going to reflect under IPO section under investment, left hand side on the mobile app. If similarly, you are going to ITS, which means you are login through your web mail. So if you're going to web, then you have to log in through your trading platform. Under there is will be one bar. Under that bar only IPO, there will be a tab which will be reflecting IPO. Under IPO section, SGB will be reflecting. The same way, SGB, and then you just have to mention the units and then you can proceed. This is the process to invest in. Otherwise, you can visit nearest HDFC Securities branch, or you can call out your RM for the help for your investment if you're not able to see that, or you can call to a customer care number. They will help you out with that. But as I said, it will be reflecting under Invest Right app under IPO section. It will be reflecting SGB, Sovereign Gold Bond Series 4. There's one query which has been raised. I earlier have bought SGB through HDFC Securities and now I have not received any certificate. In this scenario, you are doing a digital transaction, which means you have opted demat form. So any customer who is holding demat form, his demat holding statement is proof of investment for him. But there's a e-confirmation receipt which you receive from RBI that you have invested in so and so investment and this is the amount. For that e-confirmation receipt, if you have not received from the RBI, you can mark a mail to RBI itself. If you want, I can just give you the email ID or you can log a complaint to our HDFC Securities, this customer care at the rate hdfcsec.com. Just mention your PAN number and state that you require the e-confirmation receipt. They will do the needful. Okay. Or else there is an email ID which I will just give it to you. 1 second. If you can jot it down, I'll just repeat that email ID. If you can jot it down, or otherwise, I will just put it in the chat box. Everybody can just take it. It is eKuber helpdesk at the rate rbi.org.in. So I'll just put it in the chat box. Everyone can note it down. So any query related to any e-confirmation receipt you have, you can put your PAN number on that and you can just ask for the e-confirmation receipt if you want. E-confirmation receipt they provide within a day timeline. Okay, so within a day you will get the e-confirmation receipt. Any other query if you have, we can take it down right now. If we are done with the FAQ round, we can close this session. Thank you very much for joining this. Hope this session has give you all the information and the details which you needed. Thank you so much. Thank you.